Did you know that while China has completely banned Bitcoin mining, the tiny kingdom of Bhutan is quietly becoming one of the world's largest Bitcoin holders? Welcome to the fascinating world of global crypto regulations, where your investment's future might depend on which country you're in. I'm from Bitcoin Nexus, and today we're taking a worldwide journey to understand who's embracing crypto, who's fighting it, and what it means for your digital assets. Stay with me. This global perspective might just change how you invest. Cryptocurrencies have evolved from a niche interest to a trillion-dollar asset class that's reshaping our financial landscape. But here's the challenge. While crypto itself is borderless, the regulations governing it are anything but uniform. Think about it, your Bitcoin is the same whether you're in Tokyo, New York, or Mumbai. But how you can buy it, sell it, mine it, or pay taxes on it, that varies dramatically depending on where you are. Understanding these regulatory differences isn't just academic, it directly impacts where innovation happens, where companies set up shop, and ultimately, where the biggest opportunities for growth exist. For you as an investor or enthusiast, knowing the regulatory landscape helps you navigate risks and find opportunities others might miss. Today, we'll explore three distinct approaches to crypto regulation around the world. Countries embracing crypto with open arms, nations implementing balanced frameworks, regions taking restrictive or hostile positions. Let's dive in and see who's winning the global crypto race. Permissive regulatory approaches. Let's start with the nations that have rolled out the welcome mat for cryptocurrencies. El Salvador made history in 2021 by becoming the first country to adopt Bitcoin as legal tender. President Nayib Bukel's bold move aimed to reduce remittance costs and bank the unbanked. While the implementation has faced challenges, it represents perhaps the most crypto-friendly national policy in the world. Switzerland has established itself as Crypto Valley, particularly in the canton of Zug. The Swiss approach focuses on clear guidelines rather than restrictive rules. They've created a framework that treats different types of tokens differently. Utility tokens, payment tokens, and asset tokens each have tailored regulations. This clarity has attracted hundreds of blockchain companies to set up shop there. Singapore has positioned itself as Asia's crypto hub with its regulation with a light touch approach. The Monetary Authority of Singapore has created a licensing framework for crypto businesses while maintaining strong AML, KYC requirements. This balance between innovation and security has made Singapore a magnet for crypto companies leaving more restrictive Asian markets. And then there's Bhutan, a fascinating case study. This small Himalayan kingdom has been quietly mining Bitcoin using its abundant hydroelectric power. Reports suggest Bhutan may now be among the top national holders of Bitcoin. Their approach leverages natural resources for crypto mining while maintaining tight control over the operation through state oversight. What these permissive countries share is a recognition of crypto's potential economic benefits, attracting investment, creating jobs in the tech sector, and positioning themselves at the forefront of financial innovation. Developing balanced frameworks, the largest economic powers are taking a more measured approach, trying to balance innovation with consumer protection and financial stability. The United States has a complex regulatory landscape where multiple agencies claim jurisdiction over different aspects of crypto. The SEC views many cryptocurrencies as securities, while the CFTC regulates crypto derivatives. Meanwhile, individual states like Wyoming and New York have created their own frameworks. Recent developments show progress toward clarity. In 2023, the Senate Banking Committee advanced digital assets legislation, establishing a regulatory framework for stablecoins. This represents a shift from purely enforcement-based regulation to creating clearer rules of the road. The European Union is finalizing its markets and crypto assets regulation, or MiCA, which aims to be the world's most comprehensive crypto regulatory framework. MiCA will create unified rules across all EU member states, covering issuance of crypto assets, exchange operations, and wallet providers. This regulate once for all of Europe approach could become a global standard. The United Kingdom is developing its own framework after Brexit, focusing on stablecoins first before addressing the broader crypto market. The UK aims to become a global crypto hub while ensuring consumer protection. India represents one of the most dramatic regulatory evolutions. After effectively banning crypto in 2018, India has gradually opened up. Recent regulatory approvals for exchanges like Coinbase signal a shift toward a more open market. With its massive tech-savvy population, India's regulatory direction will significantly impact global crypto adoption. These balanced approaches share common elements: strong KYC, AML requirements, consumer protection measures, specific regulations for stablecoins, tax clarity, licensing frameworks for businesses. The jurisdictions getting this balance right will likely see sustainable growth in their crypto sectors. Restrictive regulatory approaches. Not all countries see cryptocurrency as an opportunity. Some view it primarily as a threat. China has implemented perhaps the world's most comprehensive crypto crackdown. After initially allowing crypto to flourish, Chinese authorities banned financial institutions from facilitating Bitcoin transactions in 2013, then progressively tightened restrictions. In 2021, China banned all cryptocurrency mining and declared all crypto transactions illegal. The impact was immediate: a massive migration of mining operations to other countries and the relocation of many Chinese crypto companies. Despite these restrictions, crypto usage persists through VPNs and other workarounds, showing the difficulty of completely suppressing decentralized technologies. Russia has taken a contradictory approach, banning crypto as a payment method while legalizing crypto mining in certain regions. This reflects internal debates between those who see crypto as a sovereignty threat and others who recognize its economic potential. Turkey restricted crypto payments in 2021 amid currency instability, fearing crypto could further undermine the lira. However, high inflation has driven many Turkish citizens toward crypto despite the restrictions. Nigeria banned banks from servicing crypto exchanges in 2021, yet remains one of Africa's largest peer-to-peer Bitcoin trading markets. Another example of restrictions driving activity underground rather than eliminating it. The restrictive approach typically stems from concerns about capital flight and monetary sovereignty, tax evasion, consumer protection, energy consumption from mining, sanctions evasion. However, history suggests that overly restrictive approaches often fail to stop adoption while pushing innovation elsewhere. International regulatory bodies beyond individual countries, international organizations are working to create global standards for crypto regulation. The Financial Action Task Force (FATF) has issued recommendations requiring virtual asset service providers to implement the same anti-money laundering measures as traditional financial institutions. Their travel rule requires exchanges to share customer information when transferring funds between platforms, a significant compliance challenge for the industry. The Bank for International Settlements has been developing frameworks for central banks to address crypto stablecoins, particularly focusing on their potential impact on monetary policy and financial stability. The G20 has called for coordinated global regulation, recognizing that fragmented approaches create regulatory arbitrage opportunities where businesses simply relocate to the most favorable jurisdictions. These international efforts are gradually creating a baseline of standards, particularly around AML, KYC requirements that are becoming global norms regardless of a country's overall regulatory stance. Implications and future outlook. So what does this global regulatory patchwork mean for the future of crypto? First, regulatory clarity is emerging as a competitive advantage. Countries providing clear rules are attracting crypto businesses, talent, and investment. The Wild West era of crypto is ending as regulated channels become the primary on-ramps for mainstream adoption. Second, we're seeing regulatory convergence around certain principles: strong identity verification requirements, consumer protection measures, special rules for stablecoins, separation of exchange and custody functions. Third, The most successful regulatory approaches recognize that blockchain technology extends beyond cryptocurrencies. Countries focusing solely on the risks of crypto assets may miss the broader benefits of blockchain for supply chains, identity systems, and financial infrastructure. Looking ahead, I predict we'll see more countries adopting crypto-specific legislation rather than trying to fit crypto into existing frameworks. Increased focus on stablecoin regulation as they bridge traditional and crypto finance. Growing regulatory attention on DeFi and NFTs. More regulatory technology solutions to help businesses comply with complex requirements for you as an investor or user. This means the importance of understanding the regulatory environment where you operate, recognizing that compliant, regulated services offer more long-term security. Watching regulatory trends as signals for where innovation and growth will occur. As we've seen today, the global approach to crypto regulation is diverse and evolving. The countries that find the right balance, protecting consumers while enabling innovation, will likely emerge as the leaders in the next phase of the digital economy. The most successful frameworks recognize a fundamental truth: blockchain technology and cryptocurrencies represent a significant innovation with transformative potential. Trying to ban or overly restrict them typically fails, while thoughtful regulation can harness their benefits while mitigating risks. For those of us in the crypto space, staying informed about these regulatory developments isn't just about compliance, it's about understanding where the opportunities of tomorrow are being shaped today. If you found this global perspective valuable, please hit that subscribe button to join our community here at Bitcoin Nexus. We're dedicated to helping you navigate the crypto landscape with clear, actionable information. Drop a comment below with your thoughts on crypto regulation in your country. I'd love to hear your perspective. And if there's a specific country's approach you'd like me to explore in more depth, let me know. Thanks for joining me on this worldwide crypto journey. From Bitcoin Nexus, and I'll see you in the next video.